Welcome to TheoTrade and the weekend update. This is Don Kaufman. Here we are. It is August 20th, 2016. First, we take a look at what to do in a marketplace that does, well, absolutely nothing. If you took a look at the spiders, they're currently trading at 218.54. Bear with me for just a moment. That was the close on Friday. Where did we close last Friday? Again, what I've done is I've gone into the analytics tab of thinkorswim, looked at some end of day data here, and this is last Friday's close, 218.46. So the S&Ps, for the most part, what have they moved? Absolutely nothing. However, there are trade opportunities that exist in this market condition over here, and that's exactly what we're going to elaborate upon. First, there's not much of a reason to look at too many technicals. That, and I happen to be a little bit of an anti-chartite. Yes, I've been accused of being anti-technical analysis, and I'm willing to admit it to a degree, because right now, again, what we're getting is stagnation in the markets. So what are some trade ideas? Well, before I go too detailed into a very specific trade setup, I want to bring to everybody's attention that the S&P options, and that is the SPX options, the granddaddy of all the option products, has now added a Monday expiration. So now there's a Monday expiration, there's a Wednesday expiration, and there's a Friday expiration. And this is, to me, of critical importance. Whether you're going to trade the product or not is neither here nor there. But again, the fact that we now have a Monday, a Wednesday, a Friday expiration, it's giving us infinitely more, not just capabilities for trading, but infinitely more data as to what the market is anticipated. And I'll give you a prime example. I look, as a much more quantitative trader, I look at things like expected move, which has been incredibly effective lately. And what the expected move roughly says right here, right now, is it says between now and Monday's close, because the options that I'm elaborating upon right now, these 2-day options, okay, they're Monday's close. The implied volatility is, like 6%, and it's only expecting a $9.70 move. So just think about it, plus or minus about $10. Okay, that's what the market is anticipating. Now, we're still passing through a weekend here. Could something happen around the world to change everybody's thought? Absolutely. But an interesting opportunity that presents itself is going into the weekend. All right, I mean, you can open up these option chains now, and you go into the weekend thinking, the world may just come to an end this weekend. We've all walked in and taken a look at the screen on a Monday morning and been like, wow, with the market having a dramatic move, typically to the downside. We've had some wild Mondays over the years. And this now affords you the ability to either hedge, okay, which is reduced risk, or take that kind of a little bit of a flyer position over the weekend. Like, if the world's going to come to an end, it's going to come to an end, and you can make quite a bit off of it. And I'm not suggesting per se that you sell these options right now. I actually like the idea of being on the buy side of options over a weekend. What happens when you have a $9 expected move and you wake up on a Monday morning and the S&P futures are down 20? I'll tell you what happens. You're going to make a lot of money if you bought puts. So opening up the ever-expanding world of options, now there's a Monday contract as well. And hey, I want to be clear about this. There's volume in these contracts. Like, these things just recently got listed, and I say there's volume. There's serious volume. There's serious and open interest, It's, again, 2-day, 4-day, 6-day expiration. I don't know about you, but I love it. It's pretty much every day now is expiration day. And what was a fairly slow day this past Friday still amounted to 922,000 contracts traded in the SPX. That's, a little bit of chaos, a little bit of craziness. That's fairly decent volume in a marketplace that, okay, what to do in a marketplace that does nothing? Well, that's exactly what we're going to discuss now. So let's look at a trade idea. I have not been an advocate of selling options lately. And the reason being is the implied volatility is so inherently low that we're moving, okay, what the market is anticipating us to move. For example, if the market says, like here in the spiders, that we're supposed to move about $4.29 in the next 20 days, we've been moving $4.20 in the next 20 days. It's extremely efficient right now. So as such, let's go to the charts. I'm going to bring up another trade idea, something a little different than maybe you guys are familiar with, and that is we're going to look at the idea of one product versus another product. In this circumstance, okay, I'm going to take it slow, be kind of methodical on this particular front. I want to make sure we're, abundantly clear as to what this particular trade is and kind of what it pertains to and how to structure it. But if you've looked just over the last few weeks, the S&Ps have been relatively unchanged, and you're just looking right now at a 3-month daily chart on the spiders. This is the S&Ps, okay? So we'll put that and label it as the SPY. What do we have over here is the Qs. So this is the Q, Q, Q. Now, what do you see? A fairly massive divergence in the indice products. So the NASDAQ is outperforming the spiders by a fairly wide margin. Well, therein lies a trade. Now, you may or may not be familiar with the idea of pairs trading. And when volatility is doing what it's currently doing right now, and I don't feel like selling a whole lot of premium in this market, well, I go into alternative mode and alternative trades, things like pairs trades, where in this particular circumstance, what I'd want to do is sell the Qs, okay, and buy the SPYs. I'd want to sell the Qs and buy the SPYs. But the whole key to the pairs trade is how do you align these products? So for just a few minutes, I'm going to give you a crash course in pairs trading. Pairs trading can be done in the ETF product itself. I'm going to show you how to do it in the shares of the spiders versus the Qs. You can also do this in the options market. You can do it in the options market, all right? You could do it in an IRA in the options market, or you could actually trade the pairs over in the futures market. S&P futures versus NASDAQ futures. All of those products are on the table. It's your own comfort level. But I'll give you something as easy as this. The spiders right now are a $218 product, right? Pretty self-explanatory. Here they are, $218. Roughly speaking, they're trading in and around, okay, if you look out at volatility, you kind of average it all together, trading in and around a 12 volatility. Done. Okay, then we go over to the Qs. So we examine the spiders first, the Qs secondarily. The Qs are a $117 product. Okay, where's their volatility? Well, most of the time the NASDAQ is thought to be a little bit more volatile, but we'll just, again, kind of on the fly over here, just take a quick glance out. You know, the volatility, it's like 1% higher. It's a negligible difference from the spider, so I almost want to count out volatility. Now, how can I align a $117 product with a $218 product? And the way we can do that, well, we have what's called a calculator. So I'll just give you a quick example. Let's say that you wanted to invest $30,000 in a trade here. Okay, so $30,000, I should say, on each side of the trade. So there's our $30,000. Now we're going to invest $30,000 in the Qs. We're going to invest $30,000 in the SPY. Is that a lot of money? Well, neither here nor there. I mean, I guess the amount you allocate is completely up to you. Just came up with that on the top of my head. You want to do $3,000? Fantastic. So I'll use $30,000. Take $30,000, okay, and divide it, okay, by, for instance, 218. What's 218? It's the share price of the spiders. What does it come out to? About 137, right? I mean, let's not split hairs over here and just some rough and dirty math. It's about 137, which means if you wanted to invest about $30,000, okay, into it, you would go out there and buy about 137 shares, okay, of the spider. Great. So we got the spiders. Now do the exact same thing with what? The Qs. Go over here. There's your $30,000, okay? Divide it by what? 117, just round. Okay, what do you come out with? About 256 shares. Great. So now we got a little bit of a trade. Now remember what we want to do. Okay, and you're like, whoa, 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 I'm confused. What do we want to do? Well, we wanted to go out there. We wanted to consider what? Buying one, selling the other. We're going to sell the Qs. We're going to buy the spiders. So to set this up as a trade, if you're on thinkorswim, great. If you're not, we can still do this on other trading applications. We can go out there, for example, and we can say, well, all right, how many shares do we want to buy? Do you remember? About 137. So we can buy about 137 shares. Simultaneously, okay, I'm ordering up what's called blast all. Then I'm going to go over here, put in the Qs. Okay, what do I want to do? I want to sell some shares of the Qs. How many shares of the Qs do I want to sell? Oh, what we were at over there, about 256. Okay, so I go in here and I sell about 256 shares of the Qs. When I'm ready, fire at will. Now, these are mutually exclusive orders. There are transaction costs for both orders because I am firing into both the spider, okay, and the Qs, which are, again, they're different products. They're, when I say mutually exclusive orders, being blasted as one order. That, ladies and gentlemen, is a pairs trade. Again, can this be done in options? Of course it can. All right, you can do this what we term synthetically, replacement with options. You could do this, all right, once you know a little bit of the math behind it, you can do it in futures as well. And the futures is going to tie up the least amount of capital. When you think about like $30,000, you don't need to tie up like 30 grand. You can tie up a couple of grand in margin and hold futures contracts overnight. You know, $4,000 or $5,000 a margin for a few contracts here or there is going to be substantially easier than tying up. Again, if I'm tying up what's the equivalent of $30,000 of the spiders in a regulation T margin that ties up 15 grand of spiders. Same thing over in the Qs. It would tie up about 15 grand in the Qs, yada, yada, yada. It's a lot of money. The other area, you can't get short inside of what? Inside of an IRA. So you could even get cute, and you could do this in an IRA with options, but you could even use inverse ETFs. And I don't really like inverse ETFs, but there's a proper way to do this, okay, with inverted ETFs versus primary ETFs. So the sky's the limit. This is a pairs trade. What we'll do, though, is we will watch in the coming weeks, and what you'll very likely see in the next few weeks, the market will start moving again. When the market starts to move again, you'll see the NASDAQ converge upon the S&P. So the NASDAQ can go down, or the S&Ps can go up. Okay, or the NASDAQ can go down and the S&Ps can go up. Or, all right, what else could happen? There's a lot of different variations here. Well, they could both crash and burn, but the NASDAQ could crash and burn faster, and you're still going to make money on it. Again, you have to get a little bit more innovative when the market isn't giving you what you want. What do you want? You want volatility? Well, guess what? You don't have it right now. When volatility comes back, it's going to come screaming back. But in the meantime, innovate. There's always something to trade in any market condition. Thanks a lot, everybody, for joining us here at TheoTrade. And I'm actually going to do this quite a bit more throughout the course of this coming week right here in the TheoTrade chat room in our coaching session. So we do a coaching session each and every day. We've also added our market technician, Jeff Bierman. So our lineup now is Jeff Bierman, myself, Don Kaufman, Tony Rago, okay, Doc Severson. We've even got Slim Miller. So please join us over here, read our Theo Dark reports, and enjoy. Have a great weekend. Bye-bye.